We have a quick question here from a new subscriber who says they are really having a hard time knowing when to take profit on their trade. So they've tried many different methods and just can't seem to find one that works. They either take profit way too early and see the market move without them, or they end up holding onto the trade for too long and get taken out at break even, or even worse, taken out at a loss. And they're asking for any tips that can help. So thanks for the question. And firstly, I think what I want to say to you is that you're definitely not alone. Many traders have gone through this struggle. Getting your analysis in tip-top shape to take a trade in the first place is one thing, but getting more accurate with when to let trades run and when to take trades off can be a bit more complicated when you need to account for things like changes in the sentiment or changes in the fundamental bias, etc. So there's a couple of things that makes taking profit easy in my view. The first profit-taking scenario that's easy in my books is when you are in a trade and something happens that makes your trade invalid. So imagine that you're trading a risk-off sentiment, for example, and you are selling the Aussie yen, and suddenly something hits the wires that immediately changes the risk sentiment to risk on. That is always the easiest way to just close your trade immediately, no questions asked, because the premise for the trade changes and the reasons for entering is no longer valid, so you just get out. Now, apart from those obvious times, how can you go about finding a balance between taking enough profit and not leaving too many pips on the table, and between taking profit too soon and risk losing out on more? So for me, this balance comes down to having a solid, repeatable process. You see, for me, I find the easiest way to get around this challenge and find balance is just to establish a process that works for me, and then making sure that from a psychological point of view, I stick to that trade plan no matter what. The way that I prefer to do it, as you might have heard from many of the videos before, is by taking more than one clip on a trade. So if you're risking 1% on a trade, instead of taking one unit or whatever the lot size is at 1%, I prefer to split that risk up into various clips, so 2 or 3 clips. So if I'm risking 1%, instead of taking one trade at 1%, I'll take 2 trades at 0.5% each. Or if it's 3 clips, I'll take 3 units at 0.33% risk, if that makes sense. And the process that I have that I found has worked for me the best is taking off gradual clips as I reach key areas of support and resistance on the charts. And I like using the very basics for this. My technical strategy is very basic. I like using important psychological price levels, or important swing points, or important support and resistance areas. And even more useful for me from a short-term perspective is using good old-fashioned pivot points. And my trade plan or process with this is very, very simple. So whenever I trade, take a trade, my first, my second, and my third possible targets is always the very next significant technical level on the chart. So whether that's a pivot point, whether it's an SR level or a psychological level, whatever it is, my next key area on the chart, whether I'm buying or selling, so being resistance or support, is always going to be my first target, and the next significant level is always going to be my second one, and after that the third one, etc. And if I take this as an example, right? So let's say we decided to take a trade at that daily pivot today. My next key area of significant support that I want to be taking a unit off, let's say I'm taking 2 units on this trade, so we've got 2 units running. My very first place that I want to take profit is getting close to this overall area over here, because we have this most recent swing point going back to the 8th. We have this swing going back to the 13th. And then we have that massive, massive important monthly and weekly trend line coming in. We have the 117.16, which is an important support and resistance area, as well as the S1. So this overall area over here is going to be a very key spot for me to take off one of that unit if we reach that area for profit. Now, once that has occurred, once I've taken off that 1 unit, then I go ahead and move my stop loss to break even on the remaining units that I've running, whether that's 2 or 3 units. So that's the process that I follow. And whether it doesn't really matter what type of trade I take, I always look for that as my profit targets, whether it's the R1, whether it's a key psychological level, whether it's a trend line, whatever that key support and resistance level is, that next one that I find, that's always going to be the next target. And once I reach that first target, I move the stop to break even, and I follow the exact same process, looking for that next area of confluence to take off the profit, either at a support or resistance area, depending on whether I'm buying or selling. Now, for some, that is really counterintuitive, because from a statistical point of view, you actually put the odds for further profits against you by possibly moving to break even too quickly. But for me, I have found this process, it works for me. And the golden rule for me to deal with the emotional stuff, so that I don't deviate from my process, is sticking to this plan no matter what happens. You see, it's very easy to jump into a trade and you take profit, let's say at this overall swing area, and then the next day you see the market hasn't respected this area, it's just dropped down straight to this level. The very first thing that you want to say to yourself is, I should have let this trade run. I should have let the trade run. Now, the challenge with thinking this way is that you think you would have known that it was going to go further in real time. But the honest truth is that we never really know, right? You never know whether the market is going to go another 100 pips or another 50 pips or another 20 pips. Obviously, when you look at FinTwit, there's going to be a lot of traders that always sell right at the top and they buy right at the bottom. I don't put a lot of stock in those types of comments or those types of traders. I stick to the process that I follow. If you are able to sell the top and buy the bottom every single time, then you know what, that's great. I prefer just to stick to this process, and that means that I take it off at these key levels. And once I reach that level, I take it off no matter what. Whether it's if I've taken 2 trades, for example, and the first one I've taken off at the S1 and I move that stop to break even. If I don't get taken out of that trade and it ends up going even further away and ends up reaching that 116.20, you know what? That's fine. That's great. I could have made a lot more, but there's just no way in knowing what the next trade will be and what the market will show you next. So you can beat yourself up and say that, yes, I could have made an additional 50 or 60 or 100 pips, but the honest truth is you just don't know what the market will give you. And for me, I find the way to get around that emotional baggage of could have, would have, should have, is just having a process that works for me and just sticking to that process no matter what. Now, there might be times when you might deviate from that process if you have a very, very good reason. I think a good example is when we had our September trade challenge. We took a trade, or I took a trade on natural gas, and there was many reasons for me expecting upside for natural gas. I think we took an entry very close to that 280 level, if I recall correctly, and you can see if we held on to that trade, we would have been in a nice profit now already. And the reason why I took it off very close to the spot where we entered in this first place was because only after I entered the trade, I saw that my cost of carry on this trade was just absolutely ridiculous. I didn't realize that the carry over all the swap charges on this was so high until I saw that after just a few short days of being in the trade, I had already accrued a loss of about 0.4% on the trade, and the price was basically at the same entry. So in that type of scenario, of course, you're not just going to stick to your plan blindly. In those types of scenarios, it's okay to deviate away from the process and get out of that trade if there's an obvious reason to do so. But as far as basic trades go, as far as day-to-day trading go, I find that the best way is just to find a process that works for you and always stick to it, no matter what.